Hi there, this is Michelle Hocko with Remax Real Estate Center. Thank you for joining me. Looks like we will have a couple of viewers today, so that's exciting. If you are watching live, please feel free to give us some thumbs up, ask some questions, and if you don't mind, if you review this in the replay, just put replay in the comments and still do comment, like, love. It's wonderful for us. And we will get to questions that are asked after the broadcast as soon as we can. Today I'm going to be joined by, Kim Boehlke from Champion Mortgages. She's coming on the show to talk to us a little bit about managing credit. So if you are applying for a mortgage, you will know that your credit is a very important piece of the puzzle. So Kim has a whole bunch of strategies for us to help us improve credit quickly if we have to, and ways to get our good credit to excellent, because in the end, this is going to save us money and give us more options, which is what we want. So let me welcome Kim on the show. Hi, Kim. How are you today?
Really good, Michelle. Thanks for having me.
What a beautiful afternoon it is.
It's awesome. Let the sun shine.
Yep. Thank you so much for joining. Yeah. So you proposed this topic, and I know that this is a pretty hot button issue for you with your work. Tell me a little bit about what your experience has been helping clients with less than perfect credit.
Yeah, so it's a really interesting aspect of my business because obviously everyone is aware that they have a credit score, that they need to have good credit, but it's hard to get a lot of details about exactly how it works. And when you go on the website, they do give you a lot of general information, but from my experience, there's a lot of little niggly details that people should know that I like to give.
Okay, we're getting a comment that sound went on when Kim came on. Is that still true, Lori? Oh, it's back. Perfect. Okay, excellent. Okay, so thank you. Sorry about that. So for somebody who has maybe less than perfect credit, or I guess a better question for you is, what is less than perfect credit in 2018? Sorry.
Yeah. Okay, so what I would say is there are some magic numbers with credit. So, I mean, the score can go from 1 to 999, but the numbers that we tend to see are, between 500 and in the 800s.
Okay.
Is what we see. But 600 is a bit of a magic number. 650, 680, 720. Those will get you different products, different rates, different advantages depending on the situation and depending on the lender.
Perfect. So what can people do to make sure that their credit score is optimal on a regular basis? Just sort of tips that people might not know about, that if they were aware of, they might be able to do things a little bit differently and optimize their credit scores.
Yeah, so if you go on Equifax website, they'll give you the breakdown, so let me give you a little detail with the breakdown. So payment history is 35% of your score. So that's a big chunk. Everyone knows they should pay their bills on time. What they don't know is that what they might not know is that when we are pre-approving clients or when lenders are looking at clients, they will look at every single entry on your credit, every type of credit product you have, and they will look at your exact payment history. So if you've ever been 30 days late, 60 days late, 90 days late, or more than that, the rating, they will look at every single line. So it's good to look at the full report, not just sort of check your number, because I have seen scores that are good, but then you pull the report and you see, oh my gosh, there's all these late payments because they went to Europe and asked their sister to pay their credit card.
Oh.
So
don't ask your sister to pay your credit card. Top tip here. That's funny.
Or some awful situation happened a few years ago, or they were sick or something, and so their credit score's fine now, but there's a story there that we need to dig into a little bit. Or
Now, are
sometimes
lenders interested in the story? So this is the other question. I know that when I help people work through rentals as tenants, sometimes their motivation for renting is the fact that they don't qualify to purchase yet. So when we're presenting an application to a potential landlord, we submit it with the full story. So here's my credit, but here is why I'm here, right?
Yeah.
And this is how I've changed things. And so from here on out, things are going to be better. So is it that way with lenders in your experience?
Yes, absolutely. You have to have a story. You can't submit credit that isn't perfect without a story.
Okay.
And, you know, I mean, I often wonder like how much they really are listening to the story, but
Yeah.
you at least have to acknowledge that something happened here. Don't try to just forget, you know, just forget, like not acknowledge it. You have to acknowledge it. You have to explain it. And then how much it helps, I don't know.
Okay. So what are some tips for helping to rebuild credit in the quickest way possible?
So I would say be aware that you have to have credit. So I've seen people do consumer proposal. They got in a bad situation.
Yeah.
Consumer proposal, paid it all off, and it's been years, and we pull the credit and there's nothing there. Zero.
And they think they're doing well because they haven't
Right.
started any new credit.
Exactly.
So the opposite.
You actually have to have credit that you show that you can use. So one of the big things is, okay, so 35% is your payment history. 30% is your use credit versus your available credit.
Okay.
So if you have a credit card with a $5,000 limit, I tell people don't go above 2,500. Like in your mind, it's 2,500. If you go on the Equifax website, they'll say don't go above 75%. So they do give you that guidance, but I would say 50 because it's so easy, right?
Yeah, of course.
So that's a big one. I was surprised recently with an application where we had pre-approved a client, and then a month later, 2 months later, they actually made the purchase. We had to re-pull the credit, and they had gone up on their products, so they were over 50%, and the score dropped significantly, which it was fine because their score was so high, but in actual fact, some of these magic numbers, sometimes you need a 720 to get the best rate in certain situations. And so if you're 719, you don't get it.
Fair enough. Yeah.
You know, so that's a really important one. I think that one's becoming increasingly important. This is just anecdotal. So, you know, you have to go, this is just my experience. So I'm not the expert in the sense of I don't work for Equifax.
Yes. No, and that makes perfect sense. But you would have had the benefit of seeing many mortgage applications.
Yeah, and it could be that there's something else
credit scores had on them.
Yeah, it could be there's something else that I didn't notice, but that is what I noticed, and I saw a huge drop. So that is something I'm really trying to emphasize with people, because normally if I see someone with an 800 credit score, I'm not going to coach them on credit. But now I'm finding, you know what? Because like if you have a $20,000 limit and you travel with business, it's easy to get there with a few flights, right?
Of course.
I have to coach people. Hey, if you're doing this mortgage application, we want to get you the absolute best rates.
Yeah.
Keep your limit down. Pay it off away, or even before it gets to the limit. You know, just while we're going through the process. So that's been really interesting.
Now, what in your experience is the difference in offered mortgage rate from somebody who maybe has a good or excellent credit compared to a just so-so credit?
Well, sometimes it like when we're dealing with someone with 720 or 700, it can be 10 basis points. Not a big deal. But when you're dealing with someone who's just putting down 5%, it can be the difference between getting a mortgage and not getting a mortgage.
Of course. And it's trickier to get the mortgage as of this year to begin with. So all of these little things we can do to improve our credit in our story, as we apply to lenders, obviously is going to help us and save us money in the long run. Yeah. Are there any other, sorry.
I'm just every real estate agent I sit with recently is saying, what's going on with the mortgage market? I'm getting, offers and then the financing isn't going through. So I think all of us, it's a real time of transition. And so, yeah.
The buying power was so drastically impacted at the beginning of this year. Or do you think there's any other factors at play?
I really think they're looking really hard at credit right now.
Okay.
I think they are really, they're like, I had a client who has, she's had a cell phone that'll show up on the bureau now. She had 3,500 limit, perfect, on a credit card. She's had loans in the past, like everything was fine, and they wanted additional proof. They ended up waiving that condition, but I just thought, really? Like, I mean,
like what additional proof might that be in this circumstance?
Yeah, well, you can sometimes use, like, for example, with new Canadians, will a lot of times use proof that they've paid rent, things like that in place of credit, because there's just not the depth there.
Yeah.
So our credit manager, all of our purchases and refinances go through one credit manager. So I'll often lean on her for advice. And what she'll always, so I look at the bureau, the credit bureau, she'll look at the credit bureau, and she'll often give advice. And what she says is for young people or new Canadians, have 2 credit cards, have one from a big bank.
Okay.
And have at least a $2,500 limit on each product and use them regularly.
Okay.
So, you won't see that on Equifax. That's just anecdotal, but just her advice. And I think it's good advice.
Excellent. Yeah, I've heard the suggestion of, putting things regularly on the credit card that you would normally pay cash for, and then make sure to pay the cash at the end of the month. Actually, we talked about this recently as well. So that is really good advice. Are there any other things that you would like to suggest?
I really like the line of credit as a product. I worked in banking, and it is a tougher product to qualify for, and it does look really good if you have an unsecured line of credit on your profile.
Oh, okay.
And even young people, if they have good income and they're showing some savings, can get these. Maybe you just start with a $5,000 limit.
Okay.
It's a really good product to have, especially from our discussion 2 weeks ago about purchase plus improvement.
Yeah.
So I won't get into that, but having that line of credit can come in really handy, and it looks good on your profile.
Perfect.
Yeah.
Well, thank you so much for coming on the show today and for your time as usual. Always interesting to talk to you. Lots of good.
Thanks for having me.
Enjoy the rest of your afternoon.
Okay, you too.
Thanks.
Bye.
Bye. Well, that's always interesting to talk to Kim. Thank you so much for tuning in. If you have any questions and you are watching this on the replay, please do put them in the comments section. I've also included in the original comments on this broadcast a link to be able to subscribe to future broadcasts. So I do send out an email prior to broadcast just to remind people of upcoming shows that will be coming on. And if you have any suggestions of professionals you might want to talk to, in any way involved in real estate and home ownership, I'd be happy to source them and get some people on the show that might be interesting to talk to. Thank you so much for your time, and have a wonderful day. Take care. Maybe ending.